We appreciate our panelists' valuable contributions. Now, let's leverage our collective expertise with further dialogue. May we invite the following guests to come on stage for our next panel discussion. 马上邀请下一组的嘉宾，他们讨论的主题是 Web3 支付金融版图的革命。The topic of the panel discussion is the revolution of PayFi landscape. Please give a warm welcome to Mr. Yan Li, EVP, Head of Products and Strategy Products of RD Technologies. EVP RD Technologies 执行副总裁兼产品与产业负责人。Ms. Lily Liu, President, Solana Foundation. Mr. David Rogers, CEO of Asia Pacific B2C2. Mr. Stanley Ho, Partner of Head of Asia, HighMind Capital. Mr. Donato Pio Girana, BD Head Middle East and APAC. 掌声有请我们5位的嘉宾。谢谢。
Hello. So thanks everyone for attending this panel session on the revolution of the PayFi landscape. So as mentioned, I'm Ian Lee, actually a new joiner of RD Tech. I came out of ZA Group and was part of helping the bank. So you saw Devin just now, so helping getting that off the ground as well as the other businesses that we have in terms of insurance and software. So anyways, I'll let the rest of the panel run through the introductions, although many of them don't need much and well recognized in the industry. But running from this side over, I'll let Lily and David and so on introduce themselves for a quick minute.
My name is Lily Liu. I'm the president of the Solana Foundation. And I believe it was here at Web3 Festival last year that we first started talking about PayFi. So great to be back.
Hi everyone, my name is David Rogers. I'm the APAC CEO of B2C2. We are one of the original and largest market makers and crypto providers of liquidity, payment services and financing in liquidity. We're based in Singapore, Hong Kong, Tokyo, and headquartered out of London. And yeah, good to be here.
Hi, my name is Stanley Ho. I'm a head of Asia at HiveMind Capital. We are a digital asset investment firm headquartered in New York with offices in London and Hong Kong. We do venture investment, liquid trading, also digital art investments. Great to be here.
Hi, my name is Donato Pio Giornera. I'm leading BD for Middle East at APAC at ARF, and we are a Swiss licensed financial institutions providing pre-funding liquidity to PSPs, MSBs, UTCs, and any other licensed financial institutions, specifically for pre-funding. Thank you, and happy to be here.
Awesome. So we have a diverse cast to discuss the topic. So I'm going to start it off a little bit easy because I understand that not everyone was here in all the previous sessions. So simply, what does PayFi mean to you guys in terms of what we're trying to discuss in this scope of conversation? Wanted to start off with Lily because I'm pretty sure Solana pretty much propagated the term or formalized the term in the industry.
So I'll give you a little bit of the origin story. I've been in crypto for about 10 years, and so I feel like I've been through so many of the different cycles and heard about every one of the various narratives. I think all the things in crypto that are happening, none of them are new. They've all been written and blogged about pre-2015. And so as someone who got into crypto starting with Bitcoin back in 2013, I remember reading the white paper for the first time, and it says peer-to-peer electronic cash settlement, or a system. And it doesn't say digital gold, it doesn't say store value. And I remember back in the day when Bitcoin was blockchain and blockchain was more or less just Bitcoin, there was a lot of discussion around kind of like the ideas of Bitcoin, and there's the movement that Bitcoin started, and there's Bitcoin, the protocol. So if you talk about Bitcoin, the movement, that was about creating global financial infrastructure and peer-to-peer electronic cash system. Now, it's great that Bitcoin, the protocol, has now taken on this role of store of value, digital gold. That is the better value accrual strategy for Bitcoin, the protocol. But then to me, thinking, well, when are we going to have this, let's call it global payment system, global settlement system, global financial ecosystem that everyone can participate in, that is equally available to anyone who has an internet connection. This idea that if you have an internet connection, you have a bank account, and so that's kind of been my original motivation for getting into this space to begin with. And so last year, I'd been thinking for a while about, initially I called it settlement-based DeFi. And I was talking to Raj about this, one of the co-founders of Solana. He was like, what is that? Settlement-based DeFi. He's like, you need a better name for that. And so I explained it in kind of verbal paragraph form to him. I was like, well, it's about creating new financial primitives that are not based on a trade, but actually creating new financial primitives that are based around actual commerce, right? What is the difference? Well, a trade is, if you think about it, it's token in, token out, right? One token for another. And traditionally, stablecoins are a big part of that, but there's a lot of crypto trading, and that I would say is genesis of much of what happens in this space. But most economic activity, we're talking about human economic activity, is not token for token. It's not a trade. It's actually a settlement. It's a transaction where you're trading, let's call it a token, for a good or a service. That is the vast majority of human activity that exists. Economic activity exists, period. So I'd been thinking for a while, why isn't there a robust economy and new financial primitives being built around that? So to me, PayFi is about building new financial primitives around a payments layer, a transactions layer. Okay, so then why is crypto unique for that? Well, on the trading side, crypto is unique because you can have access to entirely new assets 24/7 and do all sorts of things with them. What's unique about payments and transactions in crypto from a commerce perspective is that you can have, instead of 1 to 3% in 1 to 3 days in order to clear a transaction, you can do it basically for nothing with no time, right? So it's super fast, super cheap, blink of an eyeball type of thing. And so I think that oftentimes articulation for why crypto payments are useful is because, it's cheaper. Instead of 100 to 300 bips, now 10 bips or 15 or whatever it might be, cheaper than Stripe. But I think that's the cost articulation for it. There's a profit articulation here as well, which is if you can save 1 to 3 days on every kind of payment movement period, then that's actually very valuable, because that actually introduces a new profit pool based around the time value of money. And that to me is the real opportunity. So anyways, I know this is a long story, but essentially PayFi to me is around creating new financial primitives around a payments layer, both on the cost side as well as the profit side.
Go ahead.
Okay, yeah, my turn. I actually hadn't heard of the term PayFi until we started talking about this panel. So I'm grateful for Lily's sort of explanation of that, because it was certainly new to me, even though I've been in crypto for 5 years. So at B2C2 we're a large trading firm. By way of context, we probably trade between 5 and 10% of Bitcoin's legitimate measurable volume every day. So we have a very good insight of sort of what the market looks like. But payments kind of came to us more as an artifact of what we do as a trading company for a very large, at-scale institutional business. We service 700-800 clients, mostly in that sort of retail platform, brokers, settlements, corporates, fund space. And actually what we realized is that we were doing an awful lot of payments flow, as Lily describes. And we didn't necessarily sort of realize it at the time, because the point that we've just made is a transfer of value process that takes place very efficiently over and above traditional markets. Now, what happens is when you step in as a liquidity provider that has a large balance sheet, what we're able to do is provide that balance sheet velocity that we were talking about to our clients by essentially funding that difference between instant blockchain movement of digital asset and fiat asset moving back in the other direction. And we were able to sort of get that going pretty quickly. And what we realized, particularly in Asia, is that 40 to 50% of our business is payments business. Retail platform, for example, know a huge number of them in Asia where fiat remittances come in from the retail segment, and then that is converted into a crypto-based asset, and for the purposes of treasury management, there is a rebalancing event. We facilitate that, and that is all payments flow. And what we've been able to do is sort of disintermediate a lot of that fiat traditional slow-moving asset through blockchain technology. So that's how we kind of think of payments technology. It's that facilitation of that movement of value.
Well, I guess for us, we look at PayFi more from a investor's perspective. For us, stablecoin and payment platforms is one of the key verticals that we look at for venture. I guess I've been here like in Hong Kong 15 years, so I've been covering Greater China from more traditional finance perspective. So I've seen the takeoff of payment platforms in China like Alipay, WeChat Pay, totally transform the payment experience. So I think the same kind of progression is happening in Web3 crypto as well. I think stablecoin payment, instant settlement, like David said, is still for us is like the biggest consumer use case. We think that will go to the next level in the coming years. So this is an area that we are very excited about, being like protocols like Solana that supports easy like adoption for consumers, easily scalable, and then projects like, for example, like RD that supports stablecoin adoption is like a area that we are very bullish on.
Yes, and for us at ARF, we really see it pretty much with what Lily was describing before as time to value. I mean, for us, PayFi is all about real payments, first of all. Payments, as of today, are really more about messaging rather than movement. Every time that you are triggering a payment, you're basically triggering a messaging system, a very rigid and broken one. And what PayFi really does is basically bridging the gap between the required speed of that payment and the rigidity of that messaging system that is actually triggering the payment. And the way PayFi does it is through stablecoins, by financing global payments and making sure that the liquidity moves as fast as information itself. And that's what we're trying to do at ARF. Like every day you have more than $4 trillion locked in pre-funding accounts worldwide. That's extremely costly, extremely inefficient, especially considering the high increase on the cost of capital in the last few years. And yeah, that's what really for us PayFi is all about.
Awesome. So starting from the beginning at something at the very fundamental conceptual level, technology level, easing into practice and execution, and then B2C2 with a balance sheet just kind of like inadvertently easing your way into PayFi without really thinking about it too much, as much as this a business opportunity. And then investment space, looking at widespread where the adoption is, and then a true practitioner trying to leverage chain and getting it right. Very interesting. So I guess then the next question then is naturally like, where do we see a lot of this like convergence of this like payments behaviors and where DeFi might come into this, or how the infrastructure really plays into it heavier? Maybe starting with Stanley, your view on like the top-down landscape and how you're looking at allocating capital at the right places on this topic.
Yeah, so I think payment, cross-border payment using blockchain technology is something that we think will flourish in the coming years. Right now, it's still, I think, in the early stage. People have seen the adoption of USDT, USDC, very much US dollar-based stablecoins. But then we do see there's a need for like kind of the last mile delivery problem similar to Web2, where users have local currencies, maybe on blockchain, but then they do want to we need people to be able to easily spend the crypto assets in like real life scenarios, or send value to different parts of the world. So I think projects tackling those problems are the founders that we constantly are looking for. I think a few criteria we will value for these founders. One of them is regulatory compliance. I think for the industry to move on to mass adoption, we need to have platforms that's embracing regulation and make sure that they're compliant, first of all. And then secondly, I think these platforms we like platforms that partner closely with large liquidity providers or exchanges to make sure there's easily there's a liquidity when you want to own or off-ramp. Second of all, I think lastly is the kind of user experience. We have seen a lot of good UX in Web2 apps. I think that's something right now the Web3 dApps are still kind of lacking. It's something that we are looking forward to in this cycle. And I think especially in Asia, given there's a large consumer base here and people have been adopting crypto relatively early, I think this is a great place for founders to build this PayFi or cross-border payment blockchain projects.
Cool. I don't know if anyone else in the group want to comment?
Yeah, what I'm really excited about in APAC is, if you look at, there's kind of talent specialists in various verticals around the world, right? So what are some of the examples is some of the best quants and HFTs, they're in Chicago. That's a good density of talent. Obviously, there's a density of talent around software engineers in Silicon Valley. There's a density of talent around consumer applications developers here in GMT+8. And one part of that, that incredible talent density is if you look at the last 15 years, who has created really, truly unique and scale payment systems, not just the fintech apps, the super apps, although it's certainly a big part of it, but then also where have you seen these all sorts of different payment networks actually be built and scaled over the last 15 years, and that's really actually out of this region of the world. And so in my opinion, some of the best payments talent out there is here sitting in Greater China and also GMT+8, sort of this APAC more generally. And so I think that there's really unique payments talent and payments insight and depth of talent in this part of the world, better than anywhere else in the world, I would say. And so I think that also dovetails pretty well with the underlying value proposition of PayFi, because in the Western world, they own the dollar, right? The U.S. doesn't have an issue with dollar access because everyone has a dollar bank account. And whatever you think about the fiscal state and the monetary policy of the United States, it is still the reserve currency. So people don't really think about currency, right? I can tell you, basically anywhere else in the world outside of the U.S. and Europe, people think about currency risk, managing multiple currencies all of the time, particularly if you are a business that has any sort of international ties, export, import, so on and so forth. And so these topics around creating more efficient payment systems and programmable payment systems just has more value in this part of the world where you have sophisticated, mature economies and an incredible amount of trade. Maybe that will change. It's going to change a little bit given the goings-on of the last couple of days, but you still have an incredible amount of cross-border payments, financing solutions, trade finance, currency management, where creating more efficient programmable money applications based on what we call PayFis, kind of application vertical, I think just has distinct value here and also draws upon, I think, the world-class talent that you can find here you don't find elsewhere. So in the US, we think that, we created PayPal 25 years ago, fantastic. Very innovative, right? And a vision that still motivates today, which is that you would have money, the convergence of data and money, and that's what blockchain does, makes data into money and then money into data. Okay, but if you look at who's actually really executed on that and made that into a truly sort of integrated consumer experience, that insight and that talent sits in this part of the world.
Okay. Very insightful. Moving on to the next question and double-clicking a little bit on some actual operating settlements or what the settlement layer might look like. So David, you mentioned that leveraging blockchain and then to disintermediate and then leveraging your balance sheet. I'm very curious to kind of hear how you're thinking about or what has changed leveraging blockchain and how this ecosystem has evolved and how that shifts the economic model. And maybe some additional thoughts from Don afterwards.
Yeah, I think that's it's a multifaceted question. I mean, I think one of the ways that we look at it is the traditional finance system has not had the risk appetite, desire from a regulatory, societal, local scamming problems like political pressure, etc., to implement any degree of more efficient settlement process. And in stepped blockchain to solve a lot of those problems. Now, when you talk about infrastructure, a lot of the problem is that we've had an industry that has largely tried to disintermediate current channels that still weigh the industry down, but actually facilitate it at an arm's length. So it's why you've seen the explosion, again, particularly in this part of the world, of payment service providers that are happy to be the step out for major banks underlying their movement of value. Now, that's even before you get onto blockchain-related technology. We have this kind of front row view of all these payment service providers throughout the region as a wholesaler sitting there. But the banks are happy to look at this stuff and say, okay, I'll offset the risk because that payment service provider is happy to be facing off to casinos, Bitcoin ATMs, anything gambling, shipping, exporting related that carries a different risk profile. And that's the demographic part. Now, the actual technology part is actually very straightforward because it's as I described it before, it's a simple movement of value on-chain that's underpinned by a funding trade on the other side of it. Now, that doesn't happen automatically, right? Like, you have to be able to be in a position to facilitate that, which is why firms like B2C2, they exist as a wholesaler to a lot of this this process happening. So I think that's the first thing to say. The banking ecosystem in the traditional world is nowhere near being able to facilitate this, and that's why I think this is why this this kind of conversation is very, very important. Now, the second thing is, and I would add specific to Asia, is that if you looked at the payments ecosystem in 2024, of all the kind of electronic-based payment services with all these different providers, over half of the $2.5 trillion worth of traditional payments transfers were made right here. And it's why we've seen this migration of many firms setting up in Hong Kong, in Singapore, under a licensing regime that is forgiving and able to sort of do this and support the underlying blockchain technology. Now, that doesn't mean that they necessarily understand the underlying blockchain technology, but they're willing to do it. And as we mentioned, a lot of the talent has come here too. So I think you're definitely going to see a more liberalized banking approach in this part of the world. And because a lot of the talent and the licensing and the regulatory regime has kind of gravitated towards this part of the world, I would expect it to be the driver of growth in payments.
Maybe I'll just touch base on the infrastructure and the PSPs, not that David mentioned. Regarding the infrastructure, at ARF we are working together with Human Finance, and we are raising DeFi pools that are powered by Solana, actually, to then finance pre-funding accounts of our customers, also including PSPs. As I mentioned before, today there's $4 trillion on average locked each day in pre-funded accounts. So far we have done $4 billion in credit at ARF, but I would say, still long way to go, definitely, but each day we're getting closer to that. No? So the idea is to hopefully remove pre-funding accounts. And we are doing that, as I just mentioned, by leveraging DeFi pools also. So that's one way in which we definitely are using the infrastructure and the technology to ease pre-funding. Regarding the PSPs that David mentioned, PSPs, of course, are also requiring pre-funding. No, so, I just spoke like the other week with a PSP, very big one, that they're getting T+1 from Checkout, Nuvei, and so on, and then they have to pay Visa, MasterCard, 1 million, 2 million, 3 million each day. They are pre-funding those accounts. We can provide that liquidity, and that's what we are doing. Again, we are trying to free up worldwide pre-funding capital that is locked in pre-funded accounts. And blockchain and also infrastructure partners like Solana are definitely supporting PayFi players like ARF in doing so.
Yeah. So expanding on the application layer in this case, directly with ARF, as well as kind of speaking to that capital efficiency component that I guess like B2C2 got the advantage from the get-go to enter the game. So very interesting, very interesting. So then you spoke actually already a little bit about the regulatory shifts and the regulatory context and how important that's going to be. So how might, I mean, and you also alluded to this immediately just now about, you know, the recent context of tariffs and so on, but then also the ongoing executive orders and things that might shift around the corner. So what are your kind of like initial views for the whole group, but maybe starting with David because you kind of kicked it off. Yeah. Go ahead.
On the regulatory side, you mean?
Yeah, on the shift.
I think, I guess I should be sensitive because we're sitting here in Hong Kong and I lived in Hong Kong for 11 years, but we've just set up a business in Singapore as it happens, so hopefully I won't offend anyone by what I'm about to say, but the MAS have been fairly forward-thinking in the way that they bracket crypto digital assets trading within the payments vertical of their licensing regime, and there's a whole other sort of capital markets side to that as well, where there's very specific capital adequacy requirements, much more onerous in keeping with traditional markets in FX and credit and equities and so on and so forth. But one of the things that we've learned from the MAS is that they're trying to understand the movement of value and what that means for things like consumer safety, money laundering, CTF concerns, over and above the actual management or oversight of crypto trading. And it's a lot of what I think the US have kind of become unnecessarily entangled in about the definition of securities and whatnot. And why is that important? Well, they're caring more about the actual that movement of money and a regulation therein and granting license, which then gives credibility to the movement of what we're talking about here, right? It's the blockchain technology. It's maybe something that they don't fully understand but are willing to embrace. And I think that's where we're seeing the progression. And I think most regulators are taking a fairly sort of open-minded view to this, but it's very clear that between the jurisdictions, they're thinking about things different way, right? So here in Hong Kong, the SFC aren't necessarily focusing on the payment side as such. They're focusing more on kind of OTC trading, on custodian, and the actual movement and the mechanics of trading things. So I think depending on where you go and what your type of business is, will drive change. And the final point I would make on this is that if you look now at all those companies migrating to Asia, it's one of the reasons why they're moving to Singapore. So you see the Revoluts, the Wises of the world. These are non-Asian companies moving to Singapore, Hong Kong, etc., because of the fact that they have got the appropriate licensing regime and support from the regulators.
Lily, maybe you want to add?
As you might expect, I do think that the only place you can really build this at scale is on Solana. And it took me a while to kind of reason my way through this before we started talking about it publicly last year. Because the question that we've gotten in crypto for many years is this ever going to be good for anything but speculation? And if so, when, where, and why? And so as I started thinking about that, I thought, will we ever actually build this peer-to-peer electronic cash system? And if so, what are the conditions for that to potentially sort of have some glimmers of reality? And I thought, okay, well, what are some of the conditions that you need? One is that it actually has to be performant. And I'm still somewhat shocked, honestly, to this day, how many people in crypto are willing to rationalize non-performant blockchains, or to say that performance doesn't matter. I just think that's not a practical perspective, because if you want, let's call it 1 billion people to be using this, and their everyday experience is to have this sublime instant experience in any consumer application, how can you expect any of these people at scale to really adopt this technology if it's essentially like dialing up in a 56K modem? That's not a thing. Okay, so that's number one, it's got to be performant. The second is that you have to have liquidity in in money that people actually use. And so again, we can have endless conversations about we love Bitcoin. I do too, absolutely. But then there's an inherent conflict between saying I love Bitcoin because store value up only and being like, you should spend it, right? And we have these memes around that silly, stupid guy. We all make fun of them for spending $10,000 or 10,000 Bitcoin on a pizza. And so you don't actually want to be using it for spending. Within some reasonable degree, like you may want to transfer it ever so often, but to say that in any near-term perspective, I'm going to be using my Bitcoin for actual consumption, that's not a thing, okay? So you have to have liquidity in money that people use. And so no matter what your ideological opinions are about fiat currency, that is the money that people use that underwrites all commerce and goods and services. So you have liquidity in that. Simply put, you have liquidity in stablecoins. And then the third condition you have to have is, well, the entire purpose of these GitHub repos, at the end of the day, Solana is just a GitHub repo, is that it is programmable. And who creates these applications? Well, it's not anyone with Solana.com or Solana.org as their email address. It is an open source community, the same people that have breathed life into Linux. It's all open source developers, so said another way, you have to have developers and liquidity and talent, so to speak. And you have to have all those three things in the same place. And when I look around, I don't think everyone else has already rationalized themselves into a state of accepting a trilemma, which is that I can have developers and I can have TVL, which, by the way, is different from transaction volume, and I concede that performance doesn't matter, and I will try to persuade you of that. Just a common perspective, and I would say probably 80% of this industry, which I just don't think makes any sense. So you've got to have all three of those conditions, and I think that there's only one place today. Maybe there'll be some other places in the future that can actually fulfill that in order to create robust markets. So that's my perspective on kind of enabling infrastructure for peer-to-peer electronic cash systems.
Yeah. So really going back to basics in this case.
Also, yes, I'm biased. So.
Yeah. And in terms of the trilemma. But I guess going back to maybe Don on your side, so I know from RD's side as well as your side that we spend a lot of time like navigating like all the right licenses or partners that have the appropriate licenses on the other side of the fence to facilitate this PayFi, whether on Solana or elsewhere. But in your view, like have you been observing any particular shifts in regulation or at least like certain geographies, or how you handling particular geographies trying to leverage Solana as a primary blockchain and so on?
Definitely. Well, with regards to regulation, there are two main topics I'd like to touch base. Now, the first is, of course, stablecoin regulatory frameworks, like Hong Kong. That's definitely something that we're looking at very closely. But then, most importantly for business, I would say it's VA, basically OTC exchanges licensing. First of all, are going to be extremely critical to make PayFi go at scale, for on and off ramping. And in Hong Kong, we're definitely looking very closely at VATP, VAOTC, and the requirements, especially pre-funding requirements that those entities have to go through by the regulator in order to operate. And these, again, are especially interesting in Hong Kong because there are pre-funding requirements, especially for VATP. VATC it still has to come, the regulation, but there are pre-funding requirements. There is liquidity need, and of course, it's a segment that we are exploring and that we are looking at very closely. Here I'll just touch base on the, what that means. Why there is a why there is a pre-funding requirements. That of course for OTCs in Hong Kong, it's definitely a regulatory need because the regulator is actually specifically asking for those OTCs, those VTP, in order to operate to have a pre-funding account. But OTCs also use us for liquidity, and again can use PayFi basically wherever they want to provide same-day on-ramping to customers from which they're collecting in countries where they don't have their own banking rails. The collection process takes 1-2 days. And there, if they want to provide the liquidity to their own customers, they would have to pre-fund, right? So again, we have OTCs that come to us, apart from Hong Kong and the VATPs, where there is a regulatory requirement. This need also comes when, because of the banking infrastructure, the rigidity of the banking infrastructure that we just mentioned at the beginning, the collection process takes more time than the desired time for their customers to on-ramp. So I mean, just here briefly.
So still a lot to navigate in terms of regulated spaces and fiat and still like stablecoins and trying to leverage blockchain. Still a lot of challenges ahead. I guess like double clicking a little bit into use cases then, maybe you can kick it off and then others can add in. But in terms of like particular use cases then, as we discussed, like you obviously have some, you have your own ARF business and releasing like pre-funding accounts and so on as a general business model. But what kind of like activities do you think are kind of driving the PayFi space? Or like what kind of like, I don't know, a trade or exchange or OTC, even if it's just OTC. But what are you seeing as the primary use cases?
Definitely. So here again, also we are biased, right?
Of course.
So obviously we look at pre-funding. So the main use cases, as I mentioned, so the first one I just talked about, so OTC. So here for same day on ramping, basically OTCs need to provide pre-funding to their customers if they want to provide the same day on ramping in countries where they can't collect on same day, obviously. So that's one clear use case where we see strong traction. Another one is for basically global payouts for PSPs and cross-border payments, MSBs. So the traditional model is the pre-funding model, right? Where basically the PSPs or MSBs, they would have to pre-fund in the receiving country, and that's of course that's very costly, but it's also very risky in some countries, especially in emerging markets. Where you have, for example, the FX risk. So there are several. It's not just costly, but it's also risky. What we see is that definitely there is a PayFi demand there. So they can use liquidity. They can demand liquidity based on the actual transactional volume, right? So instead of having costly pre-funded accounts, Nostro pre-funded accounts worldwide, they can demand liquidity when they need it every day, multiple times a day, based on the actual transactional volume that they require. These, I would say, are the main two use cases that we definitely see at ARF biased, but we definitely see it as driving PayFi demand.
Yeah, I was just going to add to that I think there's just this whole kind of strata of I would almost refer to it as shadow banking that sort of sits in the middle, where on my travels around the region, I've heard some incredible examples of use cases like this. If it's an exporter, and for the ship to be offshore, but for every day it costs them $250,000 fiat, and they need to, as soon as they dock, have that, and the movement of value takes place very quickly. Or it might be a casino drawing down significant sums of money every day. And what we see again as the kind of the wholesaler in this game is that we see dozens and dozens of firms that are happy to set themselves up and on a relationship basis be that middleman, but simply the pass-through and the clipping of the ticket in order to do that part of the transaction. And to your point, Don, pre-funding needs to happen, but that doesn't come for free, right? Like there's a cost of carry for that, and then has to be an injection of capital to fund that trade. I mean, at BTC2 we have an expression that we run derivatives lines, funding lines, a very large OTC business, but we say that every trade is a funding trade, right? Like, and you have to be able to commit balance sheet to that. And I think that's one of the exciting and interesting things about our industry, right? Because there's so much fragmentation of this, and there's so many unmet needs. I think that's what's really interesting about this PayFi space. And I think the stablecoin part is a different conversation about how you sort of transact that. But I would say that the facilitation of value transfer to all these kind of sub-layers that the big banks won't touch is absolutely where that space is going to be filled.
Yeah, and I just want to add, also from a consumer perspective, what we are seeing is that there's more and more traction for projects to bridge different stablecoins and from like on-chain assets to fiat across different regions. I think, for example, from like Latin to Africa, Middle East, and Southeast Asia, like these are the regions where there's a lot of consumer holding like crypto assets where they're facing like high inflation, FX uncertainties. So we're really great to see that there's builders building these kind of projects, like connecting the different pools of money through blockchain. And that may, like Lily said, may make crypto actually spendable. It's not just something you hold on to for forever. So that's an area that we think will take off. And the other one is we see projects tackling like spending crypto using like credit card or debit card. So again, like integrating fiat to crypto, make it like easily spendable. I think that's a theme that has been getting traction.
Yeah, that alludes to a lot of themes that actually Lily had already spoken to. Is there anything else you would want to add in terms of what you're seeing from a Solana lens, in terms of what you think are the biggest spaces that are growing in PayFi?
Yeah, I think Huma has been fantastic to work with, and I think that's part of the foundational, some of the foundational dApps that we need to have in this space. And it's something that is immediately useful and also very much scalable, accelerating cross-border payment and using velocity to create new profit pools. So low risk, depending on the product, between 15 and 20% yield. It's a pretty good deal for quite a lot of people. And so I think that is one of the starting points. I think that there's various forms of credit markets, and I think it's particularly sort of micro credit markets that are also going to become more broadly possible when it comes to maybe not so much like credit card kind of settlement across border, which is very low risk, but supply chain financing as well. I know that's also been a long time theme that people have been thinking about, working on, discussing, theorizing about for 10 years. And the ability to use these on-chain liquidity pools now at scale with the depth of liquidity you do have in crypto, stablecoins, which is unique today versus 5 years ago and certainly 10 years ago. I think it'll be interesting to take these on-chain liquidity pools and apply them to different credit markets. And I think that will emerge over time. I also think that if you look at like a payment processor, what are some of the core functions that they typically vertically integrate? And maybe folks are better off if you start to take away that vertical integration, which is they do kind of three things. They do the KYC of the inbound paying party. And then they also manage the liquidity and the actual cross-border liquidity, and so you're taking on a little bit your payment processor's balance sheet risk there as well, which is taken away with the liquidity pool. And then the third is that they manage pay and payouts. So in my opinion, a blockchain is definitively better at number 2 and number 3, meaning managing liquidity and managing pay and payout addresses transparently, programmatically. And on the first, I think is something additionally that at least we here at Solana are working on, which is to have attestation systems. So that, at least for me, I scan my face on SumSub and with Persona or Jumio, or you pick your platform. I've used literally every single one of them all of the time. And if there's a way that you can now use that for DID and then also link that into a payment system, I think that's pretty powerful. And I think potentially could be, maybe this is the time that blockchain can kind of finally solve this white whale of a use case that we've always wanted to solve, on-chain identity. And the critique of on-chain identity, why it hasn't reached adoption, is because, there's no reason to actually use it. Maybe this is one of the things that contributes to utility to actually adopting on-chain identity. And then if you unlock that, then there's many things that are not payments related that also get unlocked by having scale on-chain identity. So.
Oh, interesting. Yeah. Definitely a last mile. It definitely would help a lot of regulators. Then just like a quick last question then, maybe like 1 minute for each. Just like in 3 years, where do you think like a more PayFi native experience would look like for end users, whether enterprise or consumer? Starting from Don's side, working this way.
For me, it will be limited pre-funding. close to real-time payments, and that should translate to, at the end, ultimately lower cost for merchants and retail alike.
Yeah, I think, as I mentioned earlier, I really hope in 3 years consumers can easily swap different crypto assets with fiat across regions seamlessly. And then secondly, I think for institutions to come into the market, we're definitely seeing more and more support. Well, first from like a regulatory perspective, I think that the U.S. Government has been, like with the latest initiatives, including the Bitcoin reserve, etc. That I think that has really laid the ground for more participation by traditional institutions. I think that's still where the capital pool is from, and then we think there will be like many more use cases just in terms of like trading, or just use like crypto as a general new asset class, being like option, futures, different ways to allocate capital. I think in 3 years this will be a much bigger asset class.
I think you're going to see structurally a massive investment from traditional financial sources into the payment space. That road is already traveled down. We know that that's happening. There are some in the coming months. You're going to see some huge investments from well-known names into ostensibly smaller payment companies. I think you're going to see continued explosion in IP in the space among different forms. I think you'll also see consolidation, and I think in 3 years' time, I mean that seems like a lifetime in crypto, but I think in 3 years' time you're going to see a significant amount of control from large traditional financial institutions in that space, not just in terms of balance sheet intensive activities such as same day funding of transactions, but also just ownership of the payment rails themselves on and off chain, to be that bridge between traditional and new.
I wonder how much of, I think in 3 years there's just going to be full closed-end stablecoin-based loops. And so the need for on and off ramps is going to be much less in 3 years than it is today. And I think that fiat is just going to be much lower velocity itself. And the high velocity in fiat-related, or like let's call it fiat currency, related transactions is going to be largely in stablecoins because it's just definitively better from both a cost and profit perspective. And I also wonder how much of the existing financial infrastructure is made redundant, even unnecessary by the advent of stablecoins. So if you look at the model of fractional banking, how much of that should actually exist if you have stablecoins? What is the role of a bank? Should they just be tokenized deposits? Well, if they are, and you have to have proof of reserves, then what happens to the lending side, where you're supposed to lend for home mortgages, a very common business model, at least in the U.S. banking system. Does that just all go away, and then a bank is essentially just fiat reserve, and then all of the other financial products to be made available then gets accessed on chain? So I think that there's some really kind of thorny questions in here because anytime you have new technology, which is fundamentally more efficient, more liquid, more accessible, more open source, then the value of the various middlemen in between is eroded over time. And I think that's also going to be the same for traditional banking business models.
Fascinating. Yeah, I think I lean a little bit. I asked the similar questions myself, and I agree. I think in my view of the 3-year time frame, I think if anything would be a lot more clarity and establishment of so-called regulated stablecoins as we are participating at RD with in the sandbox. So I think like navigating that landscape is a bit of what all of you are saying. Like, well, you're going to have our institutions that are licensed to do these official things. I think that might be where the landing point is, at least in that 3-year time frame. As you were saying, Lily, in terms of where, like, what is the role of banks? Well, I guess maybe just the licensed entity that's allowed to issue credit or something like that, right? And I think there's a lot of these guardrails, and then we can see that, whether it's like on-chain identity or these other things, maybe they'll replace a lot of that kind of traditional infrastructure in existing banking. But a lot to look forward to, I guess, or at least to navigate at the least. And then I'm sure it'll disrupt a lot of where capital will be deployed and need to be used. But I thank everyone in the audience for participating and listening into our conversation. But with no further ado, I think we can conclude the panel. Thank you very much.
Thanks.
Thank you.
Thank you.
Thank you. Thank you so much to our brilliant panelists for this enriching discussion. Would you please remain on stage? Let's take a quick photo to commemorate this session.我们一起合影，来记录这珍贵的时刻。One, two, three. Okay, thank you so much. Thanks for your wonderful sharing. Please be seated.